Massive $10 billion fourth quarter loss. We've heard all about the subprime, but how did they blow it so badly? Let's take that question back to our Fox panel. First to you, Terry. Clearly, everybody was expecting bad things to happen. They looked at the numbers. The numbers weren't so far off of what they expected, were they? So why is it down 7% today?
Well, it's down 7% because of what Sandra was talking about, the decline in the consumer business and those revenues declining 60 or 70%. The delinquencies are about 5%. In the last recession in 1991, credit card delinquencies went up to 9%. We're seeing American Express, the blue chip credit card issuer, with already their delinquencies are topping 5%. And they said that there was a quick and sudden decline. You remember when American Express sold off sharply, almost 10% last Friday. The CFO there said that there was a quick and sudden decline in credit card payments in December. So this train is moving very quickly.
And Johan, we heard Peter Schiff say earlier that, in fact, this may lead to tremendous cutoff in credit cards. A lot of people will just be totally cut off and won't have the cash to spend, won't have the credit cards to spend. So consumer spending should really be hit by this.
Sure, it's going to fall off the edge of a cliff. I mean, this is
hold
just
on,
getting
Johan.
started.
Go ahead, Johan.
Yeah, no, there's no question about it. The consumer is being hurt. The ATM machine, which used to be the home equity line of credit, is now gone because the money is not there. Nobody's going to lend it to them. And this is really what has fueled the economy over the last 6 months, maybe even the last 18 months. The fact now that credit cards are starting to default at a higher rate than we've ever seen before is a clear sign that the consumer is really starting to slow down. And this is going to take some time to work out. But again, like I said, the last thing I want now is more rate cuts. It's just going to increase the price per oil. It's going to decrease the value of the dollar. And then we're really hurting ourselves in the long run. And we've got to stop looking at the 6-month picture that everybody looks at. We need to look 5, 10 years down the road.
Don't underestimate how long this is going to take to unwind. I mean, we have never gone into a recession with this much debt before. I mean, it is unprecedented the amount of money that we have borrowed, particularly from the rest of the world. Yes, it is. We didn't borrow it from ourselves.
It's 1.5% of GDP. It's nothing. It's a texture off the Queen Mary, Peter.
No, you have no idea what you're talking about.
I have any idea.
None.
We had debt out the yin yang during the 60s and 70s, way more than it is today.
No, we didn't borrow anything like this. And at least back then,
I can't believe it's blatantly wrong.
We borrowed to build factories. We produced things. We had a trade surplus in the 60s. This time we borrowed to buy houses, to remodel our bathrooms and our kitchens, to buy television sets and all this. We can't pay this money back.
Peter, they're not taking the money and buying beer with it.
No, look, 2 weeks ago you told me that you're not buying any gold, you're buying houses. And you can see what's happening to gold and what's happening to houses.
I'm making a lot more money in houses than you're making in gold.
No, in a couple of years you'll be broke, but it's okay because you can clean my house.
Well, the problem with the credit card debt, which is about $1 trillion, is it's unsecured. When you go out and use that plastic to buy, a pair of shoes, perhaps, the bank's not going to go reclaim my shoes. So this is a big problem for the banks, and that's why J.P. Chase, which is the best-run big money center bank run by Jamie Dimon, that's why that stock's down 5.5%. It's not Citicorp. It's down because of the credit card problem.
Could it be that these credit card debts are even worse because they are, as Terry said, unsecured? That is, you don't, if they default on the debt, you don't get a house like you do with a mortgage.
You get nothing.
Yeah, David, I think you make a very good point. The fact that it's secured on the mortgage side and it's not secured on the credit card side, and I think that we're going to see credit cards, people being behind on their payments, going to increase and increase. And Peter also makes a very good point. We've borrowed a lot of money, but we haven't borrowed money to invest. We've borrowed money to spend.
Yeah. Also, the mortgage debt too. That's only partially secured because the security, the collateral, is not worth nearly what people lend. That's the problem. They're way undersecured.
Okay, we got to leave it at that.